Hi, this is George. In this video, we are going to see about a Nifty weekly trade, which is a spread strategy, which is almost like a ratio spread. So before getting into the strategy, please do subscribe to this channel. Also, please join our Telegram channel and also do like the video if you genuinely like it. Let's get into the video. So this is again an interesting strategy in option trading where you will have a, like kind of minimum loss. If not like no loss, it will be like a kind of minimum loss risk defense strategy again. So the capital required is not much. It's only 70,000. So retailers can easily do this. And the payoff chart, when I'm showing the simulation, you can see it will be like kind of a butterfly or broken butterfly. It's a kind of a ratio spread payoff chart. So, and in this video, I've given like a manual backtesting for the last 20 weeks it's a Nifty weekly options. And in this, absolutely no adjustment is needed, like my few other videos. So it is very much suitable for the working professionals and part-time traders. And disclaimer, it's only for educational purposes. Please do your research before taking any trade. This is not a recommendation, but just my view. So let's get into the core of the strategy. So entry of the strategy is like a previous Thursday of expiry at 9:30 a.m. Say suppose on 14th expiry is weekly expiry is there, then we are entering on 7th, which is again an expiry day, but in the morning 9:30 a.m. we are going to enter this, and we'll be exiting on the 14th expiry day, that is that current week expiry at 9:30 a.m. again. We are exiting in the morning so that we can do our expiry day trade. If we have capital, we can do that. That is the reason we are exiting in the morning. And what is the rule for this is like we are going to sell one lot of 250 strikes away ATM and ATM call and put, and we are going to buy two lots of 450 point strikes away from ATM call and put, and we'll be selling again one lot 500 strikes away ATM call and put. So it is like kind of 1:2:1. So let me give you the example. Like say suppose if Nifty is at 16,300, then we sell one lot of put side only I'm saying now. So we sell first one lot of 1650 put, and we buy two lot of 15,850 put, and we sell one lot of 15,800 put. Similarly in the call side, as Nifty is at 16,300, so 250 points from 16,300 is 16,550. And we are going to buy two lots of 16,750, and we are selling one lot of 16,800. So this is the general definition for all the 20 weekly backtesting that I have done in the Nifty. So this is the overall, like this is the table of how it has performed week over week from starting 3rd of February till the last week, which is 16th June. So in this, I'll explain like 3 cases so that you can get to understand the strategy, what I'm trying to say. So let me see, just take you to the best case scenario first. So in this object scenario is 3rd of March, we'll go to the 3rd of March in now Obstra. So we are entering on previous Thursday of 3rd March, which is like 24th of February. You can see 3rd March is here, and previous Thursday is 24th of February. So 24th of February at 9:30 a.m. we are going to start. So which means like here the like ATM price is 16,650 almost. So 250 points away in the put side is 16,400. So 16,400 we are going to sell one lot. 16,200 we are going to buy two lots. 16,150 we will be selling one lot. This is as per the definition that we saw before. So once we do this, this will look like this. Similarly in the call side, 16,650 plus 250 is 16,900. So 16,900 we will be selling one lot. 1,700 we will be buying two lots, and 17,150 we will sell one lot. Once we do that, payoff chart will be like this. So now we will see what happens on the expiry day, which is the 3rd of March. So in this case, if you see in the put side, we are getting a premium of, we are collecting 1,545, we are in profit. Similarly in the call side, we are going to be in profit again, which is 2,850, which is what I would have given here, 2,810 in the call side and 1,545 in the put side, which makes 4,355 is the profit. So here if you see, like a market started somewhere around 16,650, which so that only like 250 points away it was 16,400, and 250 points away so 16,900. So when the market is range bound in this case, then we will be ending in profit here. So in this case, as market was in the between zone, like it has not moved any direction, we are in profit in the both the sides. So if you see in this table, you can see like many weeks we will be in profit in both sides. If suppose the market has not moved very long, like say here a break even is like only at 16,961, or ATM was somewhere around 16,450, sorry 16,650. So 310 points or somewhere around that. If it moves only, we are going to go in loss in call side. Similarly, in the put side again, it is like 16,362, where we started again at 16,650. So here again we have to move 300 points. So in a week, if Nifty has not moved 300 points, it might be like going to and fro. It might oscillate, but finally at the end, if it is like it has not moved anywhere, say suppose even if it is oscillating in one direction, if it goes loss, the next direction will be in profit. But anyway, max profit is only 1,900, and max loss can be minus 8,050. So whenever there is a wild move and if it is like trending in one direction, yes, definitely we are going to be in loss. But if suppose if the market is going to be range bound, like at least 300 points in a week, then we will be in profit. See here, 17th of February, it is like both side profit. 3rd March, both side profit. 10th March, both side profit. 24th March, both side profit. 7th April, both side profit. 14th again both side. 28th both side. 19th both side, 26th both side, 9th. I'm not counting how many times, but see so many times you are getting profit in the both side if you do this strategy. So that is the reason we are going to get this much of profit, like number of profits week will be more. Similarly, like as I told, like worst case scenario, if it is going in one direction or if it is trending, then definitely it will be in loss. So in terms of absolute numbers, again I'll take it the worst case scenario on like in loss side, which is on 24th February, where the Russian-Ukraine war was like at the peak. Like we got the information at that time, so market was reacting to it. Even the last week also, like we saw a very big wild movement, because of which we are in a very big loss. But in the terms of absolute numbers, this is the most highest loss. So let me take you to the simulation of that week. So if it is 24th February, then we will be entering on 17th of February. So 17th of February it is. 24th of February is the expiry. Same thing, I'll keep it here. 17th of February we will enter, and 24th of February is where we'll expected date of this thing. This is call side, this is put side. So ATM is 17,350. So 250 points away is 1700. So 1700 we are going to sell one lot. 16,900 put we are going to buy two lots. 16,850 we are going to sell one lot. Our payoff chart should look something like this. Yes. Similarly, this case 17,350 plus 250 is 17,600. So 17,600 we are going to sell one lot. 17,800 we are going to buy two lots. 17,850 we are going to sell one lot. This is the same rule that I have explained. Our PF will be looking like this. Let's see what happens on 24th of February. So you can see like till almost 23rd of February there was like not a very big movement to say, but on 24th we know that it was very big move, and like we saw like one side it was like minus 5,000 loss. Same thing if you see in the call side, there we saw like on 23rd it was like only 100 rupees something was in profit. Here also like on 23rd it's like 1,800 rupees profit only. So if you had closed on that previous day, you would have ended in profit. But anyway, as per the rule, we are ending in the expiry day. On that day, you can see like here 2,000 rupees profit, and here it is like 5,700 rupees loss. So as this, that's what I have given here. So if you see here, it is the maximum loss which is having. So we know that what is the maximum loss that can happen. Like if it is going to the max loss in one side, then we know that the other side, like see the max loss is like 8,000, which is this peak, which hardly happens. You can have this side, you can have like a exact point, it will never happen. So you can estimate like your max loss is only somewhere around 5,600. So even if it is like 5,600, if it is happening, then other side you will get profit of 2,000. So your max loss will be somewhere around only 3000, and not like 8000 minus 2000, 6000 will not happen. Only 5000 minus 2000, 3000 will happen, around 3500 or 4000. So we know that this is a limited risk. So if you want, you can deploy this strategy when you have like something, okay, I'm ready to lose this much of money to gain something. So for this can be used. Let me show one more example where like one side it is profit and the other side it is loss. If that scenario happens, you will end up with very minor loss, so minor profit or minor loss. Maybe you can see like whenever there is one loss and one profit, it is like only 3-digit figures you are getting. Same here. So usually it will be like this. Let me show 5th May as an example in Obstra. So if it is 5th May, then we'll be entering on last expiry of April, which is 28th April in this case. 5th May it is the expiry day, so 5th May we'll set it up. Same thing let me do here as well. 28th of April we are entering. 5th May we are exiting, that is the expiry day. 5th May we are exiting. So ATM is 1700. So 250 points away is 16850. So 16850 we are going to sell one lot. 16650 we are going to buy 2 lots. 16600 we are going to sell one lot. This is how it is going to be. Let me just check this whether I have to, as it is 17125. Let me just check whether it was 1700 as ATM or 17150 as ATM I have taken for this example. So minus 1540. Okay, I have taken 1700 only. So 1700 plus 250 is 350. So 17350 we are selling one lot. 17550 we are going to buy 2 lots. And 17600 we are going to sell one lot. Now that case we saw as minus 1540 was the loss. Here it was profit of 1850 something. That's what we saw in the table that I showed you. Okay, 1900 almost profit. So the profit overall is like 352. So these are the 3 scenarios that can happen in this strategy. So I have given the overall summary here, where like out of 20 weeks, 13 weeks we are ending in profit, which means like 65% of the weeks we are ending in profit. Overall profit, if we add this up, if we sum it up, it is like 12,000 profit we are getting. And average loss of profit per week is only 603, and ROA is like hardly 3%, but 3% in turn it's like more than 36% a year, which is a very good return if you are like okay with that. If you are like want more risk and more profit, then you can adopt some other strategy also. As I told, this is like very limited risk strategy. Your loss per lot will not go more than 4,000. As you can see, like it is like hardly 3,700 in 1 week. Okay, 1 week almost 4,300 also has happened. But other than that, if you can hardly see 3,000 also, you cannot see anywhere. Only 1 week you see 4,000, only 1 week you see 3,000 something, or else it is like 2,900, 2,700 in that area only. So per lot you are going to lose only that much amount of money. Now again coming to like month over month, what is the return on investment? You can see February month it was like loss of 5%, mainly because of this week, which was like totally unusual. And March month was the best month, where we ended in profit of 15%, and April and May were decent, 5%, 6% return. June till now it is like minus 3%. We still have 2 more weeks, I believe, 23rd and 30th June. So we might even break even, or I don't know what is going to happen, but it is not yet over. So out of the 4 completed months, only 1 month we were in loss, and that month was like totally unfortunate month when we had so many news. Other 3 months were in profit only. So it's a very good decent return on investment for the capital deployed. As I told, like capital deployed is only 70,000 per lot. So you can like in multiples of 70,000 also, if you want, you can do many lots. And it is a very good, I won't say it's a very, very good return on investment, but definitely a good investment in compared to mutual fund or FD or RD or whatever it is. So you can try this strategy. And as I told before, like we close it in the morning so that we can concentrate on the expiry day trade on the expiry days. And this is also like a kind of a personalized strategy only, instead of like a 1:2:1, you can try 1:3:2 or whatever you feel for your risk appetite. Also the strike difference also 250, 450 and 500, which I told in the previous slide. That also you can personalize and see whichever you feel is best you can do as per your trading habit and trading risk appetite. For me, I feel like this is ideal and I feel this is giving good return as well. So if you like this strategy, you can do in this way as well. So in the next week again, we will come up with some other strategy, some interesting thing, or we'll have some good learning. Thank you. We'll see you in the next week.